Hey everyone, it's Jordan here, and today we're diving into the wild roller coaster that is Florida's housing market. Just a year or two ago, it felt like homes in the Sunshine State were vanishing almost instantly. Bidding wars broke out on properties that had only been listed for hours. And buyers were flying down from New York, California, Illinois, and all over the country, determined to snag their own piece of paradise. It wasn't just hype. Homes were selling faster than ever, with prices shooting up in double digits month after month. But now, things are starting to shift. The boom that once felt absolutely unstoppable is showing its first real signs of strain, and everyone from investors to everyday homebuyers wants to know what's next. Are we headed for a gentle landing, or could some cities see real price drops in the next couple of years? That's exactly what we're going to break down today. Before we jump in, I've got some music from YouTube Studio running in the background to keep things chill, and I want to hear from you in the comments. What's your preferred video length? Do you like these deep dives, or do you want things a bit quicker? And just a heads up, there's no AI stock footage here. Let's keep this as real as possible. Alright, let's get into it. Miami has been the poster child of Florida's housing boom, with prices that seem to defy gravity. For a while, it felt like there was no ceiling. Condos on Brickell, homes in Coral Gables, and waterfront mansions were all being snapped up, often with multiple offers, over asking price. But as we move closer to 2026, there's growing concern that Miami's market could be overvalued. Many of those out-of-state buyers were investors, hoping to cash in on Airbnb and short-term rentals. But with new regulations and a softening rental market, some of that demand is drying up. At the same time, we're seeing a noticeable investor pullback. The easy money is no longer flowing, and higher interest rates are making it less attractive to buy purely for speculation. According to recent reports, Miami is now experiencing a jump in inventory, especially in the condo market, where supply has outpaced demand for the first time in years. This means sellers are having to adjust their expectations, and often their prices. Another key factor is affordability. With median home prices far outpacing local wages, many Miami residents are feeling priced out. This creates downward pressure on prices, as fewer local buyers can actually afford to buy, and out-of-state demand is starting to wane. Combine that with the possibility of economic headwinds, like job losses in tourism and hospitality, and you have all the ingredients for a correction. Let's not forget, Miami's market has always been cyclical. It boomed in the early 2000s, crashed hard in the Great Recession, and then rebounded stronger than ever. But history shows that when things turn, they can turn fast here. The city's reliance on international buyers, many of whom have pulled back due to global uncertainty, adds another layer of risk. So could we see price drops in Miami by 2026? The signals are definitely pointing that way. Overvaluation, investor pullback, and local economic challenges are all converging. If you're thinking about buying or investing here, it's going to be crucial to watch how these trends play out over the next couple of years. Tampa has been another Florida city on absolute fire. Over the last couple of years, home prices soared, with bidding wars becoming the norm rather than the exception. People from all over the country, particularly the Northeast and Midwest, flocked to Tampa, drawn by lower taxes, sunshine, and a bustling job market. But as with any market that gets too hot, there's a real risk of things cooling off, maybe even more than people expect. What's interesting about Tampa is how quickly prices escalated. From 2020 to 2023, median home prices surged by more than 40%. That kind of growth is rarely sustainable, especially when wages haven't kept pace. As affordability becomes more of a challenge, especially for first-time buyers, demand is starting to soften. We're already seeing homes sit on the market longer and price cuts are becoming more common. Inventory is slowly rising as sellers rush to take advantage of still high prices, but that creates a different problem: oversupply. If inventory continues to climb and demand plateaus, it's almost inevitable that prices will begin to correct. And with mortgage rates higher than they've been in years, monthly payments are stretching buyers' budgets to the limit. Another factor to consider is investor activity. Tampa was a hotspot for institutional investors buying up single-family homes to rent out. But as the rental market cools and profit margins shrink, some of those investors are quietly exiting, putting even more homes back on the market. This could accelerate a correction if demand doesn't bounce back quickly. Local economic factors also play a role. While Tampa's job market is solid, it's not immune to broader economic shifts. If we see a slowdown in hiring, especially in the healthcare or tech sectors, that could further dampen demand. And remember, real estate is always local, so what's happening nationally matters, but what's happening in Tampa itself is even more important. So, as we look ahead to 2026, Tampa is high on the list of Florida cities that could see price drops. The rapid run-up in prices, rising inventory, and changing investor landscape all suggest a market that's primed for a correction. Orlando is the ultimate tourism city, with millions flocking to its theme parks and resorts every year. During the pandemic, the real estate market here exploded as remote workers and investors flooded in, hoping to capitalize on the city's strong short-term rental market. But as travel patterns normalize and regulations tighten, the cracks are starting to show. A big part of Orlando's boom was driven by the promise of rental income. Properties near Disney and Universal Studios were hot commodities, with investors betting big on vacation rentals. But with more competition and a softening in nightly rates, some are finding it tougher to keep their properties profitable. This could lead to more listings as owners decide to cash out before prices fall further. Another challenge is Orlando's dependency on tourism. While that's great when the economy is strong, it makes the market vulnerable to downturns. If we see a pullback in consumer spending or a slowdown in travel, Orlando's job market, and by extension its housing market, could take a hit. This kind of volatility makes long-term price growth less certain. Affordability is also becoming an issue. As prices rose, many locals found themselves priced out of the neighborhoods they once called home. If out-of-state demand starts to wane, there may not be enough local buyers to pick up the slack, pushing prices down even further. There's also a notable increase in inventory. More homes are being listed, and they're taking longer to sell. Open houses aren't nearly as crowded as they were a year ago, and price reductions are happening more frequently. All of this points to a market that's losing momentum. Looking ahead, Orlando's real estate market could be in for a bumpy ride. The combination of tourism dependency, rising inventory, and affordability issues puts it at real risk of a price correction by 2026. If you're considering buying or investing here, it's important to factor in these local dynamics. So, Jacksonville has long been one of Florida's most affordable big cities, but, even here, the housing market has heated up dramatically in recent years. Prices climbed pretty quickly as buyers looked for alternatives to more expensive spots like Miami and Tampa. But now Jacksonville is seeing a different trend, rising inventory and a growing gap between what sellers want and what buyers can actually afford. One of the biggest challenges right now is just the sheer number of new homes hitting the market. Builders really ramped up construction to meet that surge in demand, but with interest rates rising and affordability becoming a real concern, some of those homes are now just sitting unsold. This is starting to create downward pressure on prices, since sellers are competing for a shrinking pool of buyers. Affordability is still a key issue. While Jacksonville is definitely cheaper than Miami or Tampa, prices have still outpaced wage growth. A lot of locals are finding it tough to keep up, especially as property taxes and insurance costs keep rising. If we hit a point where buyers just can't stretch any further, prices will need to adjust. Another thing to keep in mind is the slowing pace of migration. During the height of the boom, people from all over the country moved to Jacksonville for its lower cost of living and solid job market. Now though, that influx is slowing and the city is relying more on local demand, which honestly isn't enough to sustain the kind of price growth we've seen. Investors too have started to pull back. With higher mortgage rates and a less certain rental market, the math just doesn't work for as many people as it did a year or two ago. Some are selling off properties, adding even more inventory to the market and putting additional downward pressure on prices. We're also seeing homes stay on the market longer. The days of multiple offers the first weekend are fading away, replaced by price reductions and longer listing times. This is a classic sign of a market that's shifting from sellers to buyers territory. As we look to 2026, Jacksonville is definitely a city to watch. Rising inventory, affordability challenges, and slowing migration could all contribute to price drops in the coming years. So, if you're in the market here, keep a close eye on these trends. Fort Lauderdale has always been known for its luxury real estate, with those stunning waterfront properties and a lifestyle that attracts buyers from all over the world. But lately, even the high-end market is starting to show some signs of strain. After years of relentless price growth, things are starting to cool off. And honestly, it's happening pretty fast. One big factor here is migration trends. While the pandemic fueled a wave of buyers from New York and other high-tax states, that surge is definitely fading now. With remote work policies changing and some folks moving back north, demand for second homes and vacation properties is slowing down. This means more luxury listings are sitting on the market for longer periods. The luxury segment is also really sensitive to economic shifts. Stock market ups and downs, changes in the tax code, and rising interest rates all have a big impact on high net worth buyers. When there's more uncertainty, these buyers tend to pull back, waiting for better deals or just more stability before making any big purchases. Inventory is rising across the board, but it's especially noticeable in the luxury market. More homes are being listed and sellers who used to command top dollar are now facing real competition. Price reductions are becoming more common, and honestly, it's not unusual to see multi-million-dollar homes sitting for months without any offers. Investor interest has also cooled off. Fort Lauderdale was a hotspot for short-term rental investors, but with new regulations and a softer rental market, some are rethinking their strategies. This could add even more inventory to the market and put additional downward pressure on prices. Local economic factors are another concern. While Fort Lauderdale has a strong tourism and hospitality sector, it's not immune to broader economic shifts. If job growth slows or the broader economy hits a rough patch, demand for high-end homes could really take a hit. Looking ahead, Fort Lauderdale's luxury market is at risk of a correction by 2026. Slowing migration, rising inventory, and economic uncertainty all suggest that prices could drop, especially at the top end of the market. Sarasota has enjoyed a huge surge in home prices, fueled by retirees, remote workers, and investors all looking for a slice of that Gulf Coast paradise. The area's beaches, cultural amenities, and quality of life have made it a magnet for buyers, but the rapid price spikes we've seen in recent years just might not be sustainable for much longer. The sheer pace of price growth in Sarasota has definitely raised some eyebrows. In certain neighborhoods, home values jumped by more than 30% in just 2 years. That's amazing for anyone who bought early, but it also sets the stage for a potential reversal if demand slows down. We're already seeing some signs of that, with more homes coming onto the market and fewer buyers willing to pay top dollar. Affordability is becoming a bigger concern. As prices rose, a lot of locals and even some retirees found themselves priced out of the market. If demand from out-of-state buyers slows, there may not be enough local buyers to support current price levels, and that creates a real risk for a correction. Inventory is another important factor. New construction has ramped up to meet high demand, but with interest rates rising and more options available, some of those new homes are just sitting unsold. Builders might have to offer incentives or lower prices, which could put downward pressure on the broader market. Investor activity is also shifting. The short-term rental market was red hot, but with more competition and local regulations tightening, returns are shrinking. Some investors are choosing to sell, which adds even more inventory to the market. And we can't ignore economic uncertainty. If the broader economy slows, or if there's a pullback in retirement migration, Sarasota could be hit pretty hard. The city's reliance on new arrivals means any slowdown in migration could quickly impact home prices. All these factors combined make Sarasota a city to watch for possible price drops by 2026. If you're buying or investing here, it's smart to keep an eye on inventory levels and demand trends over the next couple of years. Cape Coral has been one of the fastest growing cities in Florida, with new construction popping up just about everywhere you look. Builders really race to keep up with demand as people flock to the area for its affordability, water access, and laid-back lifestyle. But as we head toward 2026, there's growing concern that the market may be headed for oversupply. One of the biggest risks in Cape Coral is just the sheer volume of new homes being built. At the height of the boom, there were construction cranes on almost every block, and it felt like everyone wanted in. But as demand cools and more homes hit the market, there's a real risk that supply will outpace demand, especially if migration slows or interest rates stay high. Affordability is also becoming an issue. While Cape Coral is still more affordable than a lot of other Florida cities, prices have risen sharply in recent years. If buyers can't keep up, we might see more homes sitting unsold, forcing sellers and builders to drop prices to move inventory. Investor activity was high during the boom, but now, as the rental market softens and returns shrink, some investors are pulling out. This can lead to even more homes flooding the market, adding to the oversupply problem and putting more downward pressure on prices. Another concern is the local economy. Cape Coral's job market is heavily dependent on construction and real estate, so any slowdown in those sectors could have ripple effects. If builders cut back or projects get delayed, job losses could further dampen demand for housing. And then there's the risk of natural disasters. Cape Coral is vulnerable to hurricanes and flooding, and insurance costs have risen sharply in recent years. Higher costs could deter some buyers, especially those on the margin, and lead to more homes sitting on the market. Looking ahead, Cape Coral is at real risk for price drops by 2026. Oversupply, rising costs, and economic uncertainty all suggest that buyers and sellers here need to be cautious and pay close attention to market trends. Naples is pretty much synonymous with luxury living, drawing wealthy buyers from across the country and even around the globe. Its beachfront properties, golf communities, and exclusive enclaves make it one of the most desirable and expensive markets in Florida. But with high-end markets come high volatility, and Naples is definitely no exception. Home prices in Naples surged during the boom, with some luxury properties appreciating by millions in just a few short years. But honestly, that kind of growth just isn't sustainable forever. As we approach 2026, signs of a slowdown are starting to appear, especially in the ultra-luxury segment. One key risk is the changing profile of buyers. During the pandemic, there was a rush of wealthy individuals relocating to Florida for tax and lifestyle reasons. But as the dust settles and some people move back or look elsewhere, demand for the priciest properties is waning. This leaves more homes on the market and creates downward pressure on prices. Economic uncertainty is another big factor. High net worth individuals are often the first to pull back during times of volatility, whether it's due to stock market swings, tax policy changes, or global events. When these buyers hesitate, the luxury market can shift quickly from hot to cold. Inventory is also on the rise. In the past, there was always a steady flow of buyers for Naples's most exclusive properties, but now, more homes are sitting on the market longer. Sellers who once commanded top dollar are having to adjust expectations and prices. The rental market is another consideration. Some investors bought properties to rent out seasonally, but as competition increases and nightly rates drop, the returns aren't as attractive. This could lead to more listings as investors decide to exit the market. For all these reasons, Naples is a city to watch for potential price drops in the coming years. The volatility of the luxury market, changing migration patterns, and rising inventory all suggest that prices could correct by 2026.